Welcome back, investors, to Ticker Time News. I'm Adam, and for the third consecutive quarter since going public last November, Braze, ticker symbol BRZE, exceeded EPS and revenue expectations, while also issuing upside guidance, which is pretty rare these days. The customer engagement platform developer continues to generate strong 60+% revenue growth, fueled by an evolving marketing approach from enterprise that emphasizes real-time customer data that are collected during their digital journeys. While Braze has capitalized on this powerful secular trend, its impressive results haven't translated into lasting gains for its stock. Since its IPO, Braze has plunged by 67% as expensive tech stocks have dramatically fallen out of favor due to rising growth concerns. When the stock market began to descend last December, Braze was trading with a PS of around 20 times. Now, its PS sits at about 5 times, which is quite reasonable given Braze's high double-digit revenue growth. The company is forecasting revenue growth to slow down just a little bit. The midpoint of its upside Q2 revenue guidance calls for a year-over-year increase of 45%. Compared to 62% in Q1. However, that growth rate is still very healthy, and Braze said that it isn't experiencing any slowdown in demand due to macroeconomic headwinds. In fact, Braze's CEO believes that the increased macro volatility and uncertainty may actually be helping Braze. During the earnings call, Braze's CEO said, quote, "With rising inflation and economic uncertainty creating headwinds for e-commerce, improving conversion rates for acquisition effects, and lifting customer value throughout their lifetimes has taken on a greater importance. Customer engagement remains imperative for today's business, and sometimes it is even precisely because the macro environment is harder that party-first audience engagement becomes a higher priority." Based on the company's results, it's hard to argue against Braze's comments. Braze's top-line growth was driven by a combination of new customer wins, upsells, and a strong renewal rate. Total customers increased by more than 500 year over year to 1,503, with the number of large customers with an annual recurring revenue of $500,000 or more growing by 65% year over year to 129. Meanwhile, its land and expand strategy is firing on all cylinders, illustrated by its dollar-based net retention rate coming in at a robust 127%. In an environment in which inflation is taking a toll on corporate margins, Braze's non-GAAP gross margin edged higher by 40 basis points year over year to 67.8%. As the company grows in size, it's achieving economies of scale within its technology cost structure, especially across its database and hosting expenses. Additionally, Braze is realizing personal expense efficiencies due to an improvement alignment of management structures. Although Braze isn't profitable yet on a net income basis, it did provide positive free cash flow of $15.7 million in Q1. Compare that to a loss of $4.6 million in the same quarter a year ago. The improvement was driven by Braze's strong bookings from Q4. In its brief history as a publicly traded company, Braze has posted stellar quarterly results, and Q1 was no exception. The stock's super high valuation has been its demise, preventing shares from experiencing a sustained rally in the wake of these strong results. With Braze now trading with a much more reasonable valuation, perhaps this quarterly report will be one to ignite a more enduring move higher. Whether that bounce becomes a reality will likely depend on the stability of the broader market. So what do you think about Braze? Obviously, don't jump in right now because this crazy market has not found its bottom yet. But when it does, this is a stock to have on your shopping list, right? Do me a favor, click that like button, share this video, and join us in beating this crazy market by clicking the first link in the description. I'd love to see you there. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.